Hey everyone, I'd like to talk today about a company called Intrepid Potash, and I've traded in and out of this a few times and made some money. And I struggled really hard about whether to invest in it this time. If you look at it on Yahoo Finance, a PE of 1 looks incredibly cheap, and I mean all the other potash companies are pretty cheap as well. So this is Mosaic. It's a big one. It's trading at a PE of 5. And the other one, Nutrien, is also trading at about a PE of 5. And this at a PE of 1.5 looks incredibly cheap. So I'd like to talk about why it's that cheap and why I passed up on putting money in at this price. So basically, this company went public in May 2008, and if you can see there, the price is 600. And at that time, potash was at an all-time high, almost $800 a ton, and people were clamoring for a piece of this company, and that's why the price was so high. And then it sort of potash prices collapsed, and at one point it was trading for less than $1, and then there was a 10-for-1 stock split, so call it $10. Then recently as during the early pandemic, which I think the low was in May, you could have got this for $8 a share, and the market cap right now is 376 million. So at $8 a share, it was about 80 million, let's call it. You could buy the whole company for 80 million, no debt. And just the capex on the existing mines that they have is probably more than it's trading at now. So if you could have bought the whole thing for 80 million, that sounds like a great deal. So why did I pass up on it now when potash prices seem so high? They're $700 a ton right now, and as I said, the all-time high is about 800. So why did I pass that up? Well, first of all, let's take a look at something here. So potash is this pink-looking mineral that they use for certain types of plants that need potassium. So think about corn, think about different types of fruits like bananas. This is something that they would use. There's other fertilizer that they make from natural gas. And they create the methane out of the nitrogen in the air using natural gas. And then that's a different kind of fertilizer that you would use on things like wheat. But for things that would need potassium, you would use this mineral. It's very common. And there's a couple of ways you can mine potash. One is in these giant underground mines using big pieces of equipment, and then you just dig it out. And it's this is the most expensive way to mine this stuff. And the big guys like Nutrien and Mosaic and the Russians, they all use this method. So most of the potash in the world is in about split up about 3 places. So about a third of it is Canada, and the 2 big players there are Nutrien and Mosaic. About a third of it is in Russia and Belarus, which is why the supply is constrained now and potash prices are really high. And the remaining third is kind of spread out in different little pockets all over the world. So there's some in Asia, there's some in Australia, there's some in Africa, there's some in South America. And the little bit that's in the US is where Intrepid Potash is. So this is the more expensive, labor-intensive way to mine potash. And then the other way is to sort of take advantage of the fact that potash is a salt, and you pump some water down into the ground where the potash is. It turns into salt water, you pump it out, and the way that Intrepid would do it is just dry it in these different ponds. And as the water dries up, you scoop out the minerals, which is mostly potash, and you sell that. Up north in Canada, where they do more of this type of mining, they do some of this, what they call solution mining, but it's more expensive in Canada because in the US, where Intrepid Potash is, it's located in the desert, so you can just throw the salt water, the brine on the ground and have the sun do its thing, and it doesn't cost you anything. And in Canada, you would boil that water off using natural gas, so it's more energy intensive. And Intrepid Potash also has a couple of price advantages over their Canadian counterparts. One, as I mentioned, they can just dry this stuff on the ground. They don't have to boil it off with natural gas. When prices are low, they can use exclusively this method. And when prices are high, they can resort to some of the stuff with the machine. And, the Canadians, it's sort of, they don't have the opportunity to use just solution mining. And the Canadians also are higher taxed than we are, and they have to pay the provinces a certain amount of royalty when they take the potash out of the ground. And if you're shipping to Canadian farmers, shipping from the US, you're closer, so you have that advantage and lower shipping costs. So Intrepid Potash has a couple of advantages over the producers in Canada or Russia or Ukraine or even Africa and Asia and Australia. The disadvantage they have is that it's small. If you look at Nutrien or Mosaic is a $16 billion company. Intrepid Potash is 400 million. So they are a price taker, not a price maker. So the big guys are doing all the mining, and if they ramp up supply, there's going to be a lot more potash, and price goes down. If they cut back, prices go up. So they sort of have to react to what the big guys are doing. They don't get to decide for themselves. The pluses that they have, as I said, the price looks incredibly cheap, and they have no debt. No debt, well, very little debt. And the current ratio is 3.5. So, they can go 3 years of without having to worry about going under. So no debt, they make a lot of money. And as Peter Lynch said, it's pretty hard to go bankrupt if you don't owe anyone any money. So those are the pluses. Now, what are some of the problems? Here's the price of potash over time from the 1970s to now. So this here is when, as I said, they went public, Intrepid Potash, and price was at an all-time high. This is recently when it was about $200, and they were barely breaking even. And after the invasion of Ukraine, the price shot up to where it is now. This price is a little inaccurate. It says 562.50. Currently, it's about 700 and change. So it's very high. But if you look at what the price was prior to the invasion of Ukraine, it was in the 200s. So there's no shortage of potash. It's not like natural gas where they've been under investing in production, and that's why there's a shortage now, and it's going to take a lot of time to ramp up production. We haven't had a shortage of it for quite a while, and the reason that it's shot up, there's an artificial shortage because of the war. So if you're thinking of investing in a cyclical commodity like this versus oil, you have to think that if they are going to start looking for more oil, it's going to take time to find it. It's going to take time to drill for it. It's going to take time to test and put the wells in place and find people to invest in it, find the reserves. But, if you're thinking, well, what's going to make more potash come online? That would just be the end of the war in the Ukraine. So, if you think 5 years out, I don't think that they'll be still fighting in the Ukraine 5 years from now. So it's more likely that the price will resort to what it was before the war than that it will stay high, as a lot of people think will happen with other commodities like oil or uranium or other things like that. So that's one thing. So these guys can stay profitable in the 200s because they use this method of mining where it's solar evaporation, and they are the low-cost operator. And so if you're the low-cost operator, you don't have any debt. It's pretty tough to go bankrupt if you don't owe anyone any money. And in a cyclical business, when prices are high, everybody makes money. And when prices are low, it's pretty hard to beat the low cost providers because everyone can go out of business, and that they'll probably be the last man standing. So that's their advantage, is they're the low cost producer, and they're so small it's like a cockroach that they'll survive a nuclear blast because they're indestructible. They don't owe any money. They're the cheapest producer, and they have all those other advantages. But as I said, the problem is that it is a cyclical commodity, and the price is so high now because of the war. And so if you think 5 years out, what's going to happen with the price of oil because of the supply, what's going to happen with the price of uranium, what's going to happen with the price of any other commodity, you just think, well, the price is up because of the war. So do you think the Russians have 5 more years of fighting left in them? And if not, and they negotiate some type of peace and the sanctions go away, prices will probably be resort to here. So even though they're making a ton of money now at 1 times earnings, it looks really cheap, but that 1 times earnings may go away. There's also a problem that happens with a lot of cyclical commodity producers, especially with oil, which is that they don't make money for a long time, and then when they start making money, rather than rewarding shareholders by buying back stock, increasing the dividend, paying down the debt, and making the company more attractive, things look good, so they just buy more money and ramp up productions. And that's kind of where I soured on this, because they didn't borrow money, but they are definitely ramping up Capex to invest in this. And if I was sure that this price for potash was going to continue for the next 5 years, sure, that would be great, but I'm not convinced of that. So that's kind of what made me take a pass on this. And this isn't investment advice. You do you. This is just what I looked at when I decided to do my analysis of this. And you may think this is a better deal, and you may be more risk tolerant than I am, but that's just sort of what I saw. So there's a couple of interesting things about this company too that aren't exactly reflected by the balance sheet. So the way this first came on my radar, I was looking through the 13Fs, and Prem Watsa had bought this pre-stock split when it was $1. So they did a capital raise at $1, and a year later he sold it for $4. So 4x in 1 year. That sounds great. So when I saw it, it was already at $2, and I bought it. And then a year later, I had doubled my money, and then I sold it. So they did a capital raise. Why did they need a capital raise? So they had water rights, which were very interesting. So I mentioned they do the solution mining, where they throw the water in, create brine, and pump it out, and then let it dry on the desert floor. So because of the that type of mining, wouldn't be possible if they didn't have water rights. And these water rights ended up being more valuable than the potash production, which was sort of operating at a level where it was enough to keep the company afloat, but they weren't really making any money on it. So they wanted to borrow some money to build some infrastructure to sell this water to frackers, which were in the area and needed water. And in the desert, there's not a lot of people who have water to sell. And when you frack a well, you need about 10,000 gallons per well. So if you've got a lot of frackers fracking a lot of wells, and each of them needs 10,000 gallons, you can make a pretty good business on this. And they thought that over time they can get this up to about 20 million a year just from the fracking. And it ended up being pretty close to that. So if you think 20 million a year and you give that a 10 capex, that'll get you to 200 million, right? And this is at 4. So when it was trading at 1, that's 100 million. And you think the water rights might be worth 200 million, and then you get all the potash for free. Let's see. So here are the results from the last quarter. So as I said, that price that the chart was showing was a little inaccurate, because it says 562 and potash is actually 713 a ton right now, which is pretty close to an all-time high. So you would think they're making tons of money, and they are. So for 2022, full year adjusted EBITDA of 140 million, 141 million, and the whole company is trading for less than 400 million. So I mean, as a multiple of EBITDA, that this looks really cheap. The only problem is that there's so much money that they're pumping back in for Capex. So again, in 2002, they spent 68 million for Capex. So they did repurchase some shares, but they're expecting Capex to keep getting expended to expand their operations for potash. And here's their presentation. Let me pull it up here. So this Trio segment is also really popular. So Trio is their branded product where it's potash with magnesium and sulfur, and you can use it on certain kinds of soil. And it was a very small part of their sales before, and now it's grown to about 39% of their sales. It's very popular, especially in Europe. A couple of years ago, it was operating at a loss because they were just trying to develop the market and they weren't sending over full shipments. They were only sending over partial shipments, and they charge you more for that when you ship over partial shipments. But now that more people are buying it, you get better rates on full shipments. And let me pull this up. So here are the mines that they had. And when I first started looking at it, they only had the solution mines and the brine. They weren't doing any conventional mining, but the prices for potash are so high that in this New Mexico mine, they've started mining with conventional methods, the big machines. So it's more expensive to mine that way, but they think the prices support that. And if they can, that's fine. But what they're also doing is they are expanding the solar solution mines where they are digging more holes and pumping out more water and upgrading the pipes and everything like that and the pumps so that they can increase production. So even though Intrepid Potash is making a lot of money this year, their Capex is so high that they're just pumping it right back into the ground. And as I said, it's usually a bigger problem with companies like in petroleum because they make money, then prices go up, and then they borrow money to expand production, then prices go down, and then you're stuck with a bunch of debt, and the prices for your commodity don't support this. And all these guys don't have any debt. All the money that's being made is sort of being pumped back into expanding their operations. It's not coming back to shareholders. So if they were making all this money and it was sitting on the balance sheet being used for buybacks and dividends, okay, great. But there's no dividend. They're not doing a whole ton of buybacks. They're just putting that right back into production. So that's kind of what I see there. And the water thing is really interesting because they made about 20 million last year in water, which is what they thought they would when they did that capital raise several years ago. And about 17.5 million of that is selling to frackers, and the rest is using that brine. It has some agricultural uses, but the 17.5 million, that could go up because if you are like many people who think that oil production is constrained and we're going to have to produce more oil, then people will likely do more fracking, and then there'll be more demand for that water part of the business. And so that 17.5 million might grow higher. However, most of the money that's being made in this company right now is being made from the potash side because the potash prices are so high. So that 17.5 million is going to be dwarfed by what they're making on potash. And as I said, if they were returning that to shareholders, I think that would be great. because I don't see potash prices staying high forever. And this is just my opinion. I'm not a potash expert. I just know that before there was a war in the Ukraine, potash prices didn't seem to be going anywhere, and now they're through the roof. And if you think they're going to stay high forever, you're either assuming that the war is going to go on for several more years, or as I mentioned, these guys are small operators, they're price takers, not price makers. If they've expanded their production in that mine that was underutilized, you can be sure Nutrien and Mosaic are going to be expanding their production too. So that might bring down the price as well. And currently they're the only US operator, but there's another US operator that's sort of waiting in the wings. There's somebody who's raised a bunch of money and they have permits, and in Michigan, and supposedly they have a deposit that is very high quality, and it's possible that they could be an even lower cost producer than Intrepid Potash. And they should have been operating already. They got permission to use a bunch of water from Lake Michigan, but environmentalists sued to try to block it, and it looks like it will be moving forward at some point, who knows when. But there's too many moving parts that don't look favorable. I don't think it's as clear a path to victory as it would be for something that is supply constrained like oil, which if you wanted more oil, you're going to have to ramp up exploration in the deep sea, or you're going to have to ramp up exploration in other parts of the world where you haven't been lately. And when oil prices are high, governments, especially in Europe and now even in the US, they talk about windfall taxes for oil. So if you're an oil company and you're thinking about expanding production, and then they talk about windfall taxes, that's not going to encourage you to drill more. So that sort of makes me wonder if exploration will bring more supply online. But with regard to potash, everyone knows where most of the potash is everywhere in the world. A third of it is in Russia and Ukraine, a third of it's in Canada, and there's little pockets like what Intrepid Potash has in different parts of the world, like a little bit in the US, a little bit in Africa, a little bit in Asia, a little bit in Australia. But we all know where it is, and there doesn't seem to be any problem looking for it or digging it up. It's just that a third of the production has been knocked out because of the sanctions from the Ukraine war. So yeah, that's what I see here. I think an adventurous person might look at this and think, hey, I can make a lot of money here. And I've traded in and out of this. If it was down lower, like in 2020 during the early pandemic, I had a little bit of this. I should have backed up the truck knowing what this is worth. And it did get very cheap at some point. Early on in the pandemic, it got down to $8 a share. And early on in the Russia-Ukraine war, it shot up to over $100 a share. So $20 and change looks optically cheap now, but as I said, there's no guarantee that the potash part of that will remain high. And even though it's probably trading now for less than replacement costs of those mines, there's a pretty good chance, in my opinion, that potash prices could come back down. You might feel differently, and if this is a buy for you, go ahead. But I'm much more risk averse, so I like sure things. And I feel like too many unknowns here. The producer in Michigan that could come online at any time. The big guys like Nutrien and Mosaic could ramp up their production, so it could bring a lot more supply online, even if Russia and Belarus don't come back online anytime soon. And part of their investment in new production in potash and new production in the water, that could be hampered also. If oil prices come down, the demand for that water will come down. And if they've spent a bunch of the money that they made this year on record high potash prices to build up new production, and potash's prices come down, although they didn't borrow debt to expand, they used all the profits. So what did that leave you as a shareholder? So that's just my thinking on it. And it's not a recommendation to buy or sell. As I said, it's just me walking through my process. I don't run a fund with hundreds of positions. I'm just investing for myself. So I look at as many different things as I can, and I'm very selective, and I just turn over as many stones as possible. And as Warren Buffett said, how do you do this? And just start with the A's and just keep going. So you have to look at things and discard them quickly. This one is one that took me a while to decide on, because I have invested in and out of it before and made money in the past, and the price looked really cheap now. And honestly, if they hadn't expanded, I thought this would have been a great price. But all the money they're making, it seems like they're just pouring it back into expanding. And I'm not convinced that the price of potash is going to remain at the price it is now and not revert to what it is before the Ukraine invasion. So I decided to take a pass on this. So that's my thinking on this, and why I sort of ultimately decided to pass on it. And also as a philosophical thing, as a value investor, a lot of times it's very tempting to go what I like to call dumpster diving, and just find things that look super cheap. And you can make money that way, but I think you have to keep being right and keep looking for new things. And I'd like to be the type of investor who just finds compounders and just sits on them for years and lets them go up and up. And so when I thought about this as a long-term compounder versus a company that, like the next Amazon or something, I don't know if I'll find the next Amazon, but I think cyclical commodities are not long-term compounders. They're things that if you time them right, you can make a lot of money, but because they almost always eventually come back. But a lot of times you're just sitting and waiting, and then your return isn't very good, because you've just been sitting on it forever. So there's people that have been saying that uranium's coming back for the past 10 years and it still hasn't come back, and that's been dead money all this time. So yeah, just philosophically, I'd like to find a company that I can just buy and hold forever. And I have some companies that I hope are like that. Like, I did a video on St. Joe recently, and that's one that I've had for a few years, and I don't plan on selling for at least another 5 years. So I'm trying as an investor to look for more compounders like that, instead of cyclical commodities that are on the upswing. And that's another reason that I passed on this. But a lot of people do really well investing in cyclicals, and especially specific commodities where they have an area of expertise. So if that's you, knock yourself out. And if it's not, that's fine. There's more than one way to skin a cat. And, the money you make from investing in cigarettes, or this person makes investing in potash, or that person makes investing in Amazon, the dollars are all the same when they're in your bank account. So anyway, I plan on doing a few more videos. If you like this, just leave a comment, and we'll see you guys soon. Thank you.